Welcome back. This is Open Exchange. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, we're getting into pre-open now, but for the time being, let's get in some derivative strategies. Manoj Muralidharan joins us to tell us exactly that. Hi, Manoj. Morning. What's your view on the index, as well as fill us in with your strategies?
Good morning, Nigel. We all know that this monthly expiry would be on Wednesday. So we have actually seen the rollover pickup. The Nifty is at a good 18%, and the Bank Nifty is already at 25%. So we believe that the Fed futures that we have would see good buying even in today's trade. So 18,080 happens to be the support for the day, and we believe 18,170, a good 110 points on the upside, might be the resistance. But there is importance to the option data that we see, and the max pain says that the expiry can be closer to 18,130, 18,130 as a spot. Now, stock specific also, we believe there is good buying which is happening yesterday, not only into the private sector banks, like even Anuj was mentioning that. But then there are two other stocks which has been outperforming right from October, November series. So we like ONGC, which can be bought with the Fed futures around 147. The stop loss should be 143, and we expect close to 156, 157 as a target in that. Second would be Tata Steel. We believe that 120 to 121 becomes a good buy even in today's trade. The stop loss should be 116, and the stock has a potential to go to almost 128 to 129 at least as a short-term target in the stock.
Manoj, stay with us. Actually, I'll tell you why. Let's just, this is Market Laser. And let's just quickly highlight the stock that I'm going to present is Tata Steel itself. Again, it's breaking out. I mean, simply put, maybe just about for the first time after 8 months, starting to get its shine back. Now, what you're seeing on your screen is this downward sloping trend line, which has been in place all the way from the all-time high on Tata Steel, which was made in August of 2021. All right. About 153, 155 or so was that level. As you can see, it's downward sloping. It's held all the way. There were a couple of attempts to take this out in March of 2022. And since March, it's been 8 months. In between, the stock got to lows of 80, 83, bounced back all the way to about 115, sold off once again to sub 100, another bounce above 100, sold off to under 100, and now finally we are back at this trend line once again. Actually, as of yesterday, it depends on how you draw it, but as of in intraday trade yesterday, we actually went above this and then closed slightly under it. Of course, I mean, fundamental factors we've been kind of highlighting. There was that CLSA note. Nigel has been talking about it. Global macro factors, which is, of course, the dollar being extremely weak is another powerful reason why. Metals perhaps are a sector which perhaps should be on your radar. Will it fail this time, or will it continue moving higher? I think that is the question on Tata Steel. But perhaps, I mean, after 8 months, you get a bit of a move here. Manoj, the call was on Tata Steel. Is the F&O side of things also looking good? And any additional thoughts? You have that as a call, but anything else? Yes.
Yeah, Prashant, that's a very good observation. But Prashant, ideally, this move in Tata Steel started all the way from 106 to 108. So if you just go back just 2 months, October, November expiry, I believe the strong hands of the institution side, when they enter into a stock, they choose arbitrage. A fresh arbitrage is when you buy the stock futures and you see a relevant positioning in the current month future. So Tata Steel, I guess we have seen huge delivery-based buying, which was consistent even when, if you believe, just 2 months before, the metal sector entire was underperforming, and then October onward we saw the traction coming. So Tata Steel at 106 weighted average price, that comes with the concept. We believe there has been huge infusion into strong hands, and this stock has a good potential of almost 138. But then obviously, because we're into derivative trades, we give you a short-term target because that would be pertaining more to the expiry. But then yes, 106 to 138 happens to be the true standard deviation move the stock has very much. Now, there are a couple of two stocks also which has got into this. Tata Motors at 384 to 388. The same concept of delivery-based buying with that additional positioning in the futures have been seen for Tata Motors, and ONGC at 136. So these three stocks we believe have been seeing the same pattern, and this has a good move of at least 18-20% in the short term.
Okay, well, thanks a lot for that. Let's just